Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another income pick. The companies that we talk about here can be found at incomeinvestors.com. You can find the link in the description below. When the Federal Reserve just hinted it was thinking of raising interest rate back in 2021, many real estate investment trusts, or REITs for short, started to trade lower. Why? Higher interest rate make it more expensive to borrow and service debt. And REITs need to borrow a lot of money to build their portfolio. The reverse holds true too, of course. Cutting interest rates creates a more favorable borrowing environment. And recent comments from the Fed have helped juice the stocks of REITs like VICI Properties Inc., traded on New York Stock Exchange under symbol VICI. John?
Thanks, Mo. Yeah, VICI Properties is one of the largest owners of gaming, hospitality, and entertainment destinations in North America. Portfolio includes places like Caesars Palace, Las Vegas, MGM Grand, and the Venetian Resort in Las Vegas. As of this recording, the company's national footprint includes 93 experiential assets, consisting of 54 gaming properties and 39 non-gaming experiential properties across both the US and Canada. The portfolio covers approximately 127 million square feet. Put that in context, that's the size of around 2,204 NFL football fields. And properties feature roughly 60,300 hotel rooms, 500 restaurants, bars, nightclubs, and sports books. Now, it also owns 4 championship golf courses and 33 acres of undeveloped land adjacent to the Las Vegas Strip.
On the financial side, strong industry tailwinds help management raise its full year 2023 guidance.
Yeah, well, they say you can't beat the house, and you and I can't beat the house, and that's good for, REITs like VICI because it makes them more money. Yeah, for the third quarter ended September 30th, the company announced that its total revenues jumped 20.3% year over year to $904.3 million. Its net income, meanwhile, went up an impressive 68% year over year to $556.3 million, or 55 cents per share. And that's from $330.9 million, or 34 cents per share in the previous year quarter. The REIT's funds from operations climbed in the third quarter by 63% to, again, $556.3 million, or 55 cents per share. And its adjusted funds from operations, or AFFO, grew by about 16.5% to $547.6 million, or 54 cents per share. Yeah, so strong third quarter results forced VICI management to increase its AFFO guidance for full year 2023 to a range of $2.17 billion to $2.18 billion, or $2.14 to $2.15 per share.
And what's worth mentioning is that the company's FFO, which is funds from operation, and that's what really drives the dividend, has been growing. And this is nothing but a good news for dividend hogs.
Yeah, so in early September, company's board declared a regular quarterly cash dividend of 0.415 cents per share for a yield of 5.24%. That amount represents a 6.4 increase over the 39 cents per share that VICI stock paid out in the previous quarter. It also represents the 6th consecutive year in which VICI has raised its annual dividend. Now, it maintained that payout of 0.415 per share in the most recent fourth quarter. For those concerned about the company's frothy high-yield dividend and whether it may or may not be safe, it is. The 0.415 per share payout is well below the REIT's third quarter FFO of 55 cents per share.
And the comments from the Federal Reserve have helped juice VICI stock.
Yeah, we actually only looked at VICI Properties back in October, but a lot has changed since then, at least from an economic standpoint. If you check out VICI Stock on incomeinvestors.com, you'll notice that nothing really happened to the company's stock in the days following strong third quarter results and improved guidance. But on November 1st, VICI and other REIT stocks got a big boost after the Federal Reserve announced it was holding its key lending rate and hinted that interest rate cuts could be on the horizon. That momentum was further energized in mid-December after the Fed held its rate pat and penciled in a target range of 4.5% to 4.75%. By the end of 2024, this points to 3 25 basis point cuts, though analysts think that the Fed could be even more aggressive in 2024. Now, obviously, investors like what they heard. After all, lower interest rates create a more borrowing-friendly environment, which should also help, juice its profits. Before the Fed made its November announcement, VICI shares were actually down 13% year to date and down 11.5% year over year. Now, since the start of November, though, VICI shares have climbed 15% and are now up 3.2% year to date and 2.1% year over year. Those numbers on the surface are not earth shattering, but certainly better than where they were sitting in late October, which was the lowest trading range, June 2022.
And in spite of this big move in VICI stock, the outlook looks even better.
Yeah, Wall Street analysts have provided a 12-month average forecast for VICI stock of $34.82 per share and a high projection of $41 per share.
John, thank you so much for your insights. Our opinion on VICI Properties Inc. hasn't changed since we last looked at it in October. If anything, the outlook for VICI Properties stock and its dividend is even more robust. It continues to expand its gaming empire, contract escalations protected from inflation, and approximately 80% of its rent comes from SEC reporting operation. This helps provide VICI with total transparency into the health and performance of its tenant. And its tenants are doing quite well. This helps explain the strong revenue, earnings, FFO, and AFFO growth it has been reporting. Even before the Fed announcement that it would be introducing rate cuts in 2024, management said its financial momentum would continue in 2024. But the recent Fed announcement should only help further juice its still undervalued share price and reliable growing high-yield dividend. That's it for today, and make sure to go to incomeinvestors.com now to get our free special reports on our top 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We will be back with more videos soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.